Wow.
Come on, how are we feeling?
Do you remember the
That's
first
for you.
Future Proof? I got shit for wearing shorts and a shirt the first day. People gave me
Because you
crap.
dress up in like you're in a lobby.
Right? I dressed up like we're in California. That's how I dressed.
You finally did it, and I reversed.
That's
now,
right.
Now I'm wearing black and pants. Please
Have
sit
a
down.
seat.
You're my very special guest today.
Oh, that's right. Extra special guest.
Extra special guest. All right, quick show of hands. Who's been reading Barry's blog since God knows when? Keep them up. Who listens to Masters in Business?
Wow.
Who follows, is it X now we call it?
I don't know what to call it anymore.
Twitter?
Is it still live?
Who follows Barry on social media? All right, so you know my job here today is to ensure that I keep Barry on track in under 30 minutes. It's the hardest thing. I kid you not, he'll give me a call in the morning and say, hey, you have 5 minutes? I find myself from 8 to 10 locked up talking about everything but what we were meant to talk about. So make sure you keep me on track too. As Chris said, we have Slido. We're gonna make this as interactive as possible. We're gonna talk about his book. We're gonna talk about his career, talking about RWM as a firm, and create content creation. But please, if you have questions of Barry, pop them in. We'll take them as we go. All right. So the very first question, and I'm gonna call you out here, Barry.
All right.
Because 4 years almost to the day, we were sitting up here after dinner, and there was a band playing, and you're like, hey, let's have a beer. Let's just watch this band. And we just started shooting the shit. And you basically said, man, there's a lot of books out here. And I go, would you ever write another book? Nah, it's a slog. And honestly, most books probably should just be blogs.
That's right. That's Batnick's famous quote is, most books should be magazine articles, most magazine articles should be tweets, and most tweets should be deleted.
Yeah, and so now we find ourselves here 4 years later. Look at that size.
It's a little deceptive because there's a lot of white space, a lot of charts, a lot of really short chapters. So it's not as intimidating as it appears.
So tell us, why the book and why now?
When you asked, it's like, hey, is there another book in you? And I'm like, there's been 1 million books written telling people how to invest. The average investor is still pretty mediocre. And I didn't think the world needed another book saying, buy this, sell that, do this, do that, and then nobody manages to do it anyway. But during the pandemic, we got to spend a little time at home alone, and I was sifting through some stuff, and it just felt like, man, I spend a lot of time debunking a lot of bullshit in the world of finance and media and investing. And after we spoke, the folks at Morgan Housel reached out, and the folks at Harriman House reached out and said, if you were to write a book, what would you want to tell people to do? And the answer was, I don't want to tell people to do anything. I'd rather tell them what not to do. If you avoid the mistakes that we all make, and I've made every mistake that I wrote in this book, some of them many times, if you just avoid those unforced errors, you're way ahead of buy this, sell that.
Yeah, well, it's interesting. When I started reading it, I wasn't sure, who were you intending to write it for? Is it just everyday people? It didn't seem like a DIY investor. It seemed like it could be written for financial professionals. Did you go into it with a view, or you're just like, I'm going to start and see where it goes?
No, I didn't have an end reader in mind, but as you work your way through the different sections, you see the mistakes that get made. It's not just mom and pop investors, it's professionals, it's fund managers, it's billionaires. The story about the family that lost a ton of money, a few $1 billion in Enron, they rolled out of Enron into Bernie Madoff. And after Bernie Madoff, they said, we got to try something different. So they rolled into FTX and Sam Bankman-Fried. People don't believe that. You have to Google it to find out, oh, the Belfers, that's a real family.
There's ChatGPT now.
That's right. So the idea is that it doesn't matter if you're running a $50 billion hedge fund or if you're handling a $100,000 IRA. You're a human being. You're susceptible to all of these cognitive errors, all these behavioral problems. If to quote Charlie Munger, he said, Berkshire was so successful not because him and Warren were smarter than everybody else. He said, we were just less stupid. And so that's my goal. I want to be less stupid.
Yeah, so you break the book into 4 parts: bad ideas, bad numbers, bad behavior, and good advice. Did the framing, again, like did you set out, okay, I'm gonna put the skeleton together and this is how it's gonna do it? Or did you start writing and then say, oh wow, there's a pattern here?
I use a couple of different software programs to outline things, and for this, I decided not to do that. I took 3x5 cards, and I would write chapter ideas and just put it on this giant bulletin board in my home office. And I would, kind of rearrange stuff, and it almost self-organized itself. Once I figured out ideas, numbers, behavior, the chapters kind of fell into place. And if you think about our progression, we hear lots of terrible ideas. We get all of these, we see, we read, we hear, we're told things that turn out not to be really good. And then when you look into the math behind what drives markets, what drives stocks, what leads to either underperformance or outperformance, that's the math, and it all manifests in behavior. We make mistakes, we engage in bad behavior, and the 3 of those things lead to less than optimal outcomes. And again, make fewer mistakes, have better outcomes.
Yeah, so let's dive into some of it. So you warned about denominator blindness. Can you explain what that is to the crowd?
Sure.
And why it matters?
So look, we are primed to see danger. Let's play pop evolutionary biology. You're here because your ancestors reacted anytime danger reared its head. Anyone who's kind of blasé about that, they no longer are participating in the gene pool. And so, in the media, if it leads, it bleeds. So you are just hardwired to see bad news. And every newsletter selling Armageddon, every sort of terrible, here comes the end of the world story, AI is going to replace everybody's job, whatever it is, they're geared that way because it's an effective way to get attention, and this is an attention economy. And so denominator blindness is the concept of you're only looking at the top number, you're not looking at the data set. My favorite example, someone announced the company was laying off 10,000 people, but they didn't say how many people worked for the company. Is it a regional manufacturer that has 25,000 workers? 10,000 people is a shit ton of workers? Yeah. Or is it Walmart, in which case it's 1 person every 6 store? That happens every day before lunch anyway. Yeah. So if you don't have the framing, you don't have the context of a number, when you hear the market drop 500 points, is it the Dow, in which case that's normal motion, or is it the S&P where it's almost a 7-8% move? It's a big move. So you need context, and we tend to see that top number in the numerator is the top, the denominator is the bottom. The better way to think of it, the non-math way to think about it, what is the context for that number? How significant is it? If it's just big and scary, are you hearing it correctly? Are they giving you the framing? Or are they just trying to get your attention and scare you?
Let's go to forecasting trap. Can you explain what that is in plain English? And
forecasting?
The forecasting trap.
So everybody wants people to tell them what's going to happen. We love mystics. We love seers. We want a strong leader who's going to say, let's all grab our sticks and go kill that mammoth, and then we'll have meeting for the whole winter. The problem is, and the data shows this over and over again, we're not very good at forecasting what's going to happen in the future. Mostly because the world is pretty random. Think about the forecast from December 2019, the year ahead. Nobody had global pandemic closing the whole economy. Oh, and by the way, market's going to scream 69% from the first quarter lows. So that the random things that happen, the Russian invasion of Ukraine, like even this year, the tariffs. Yeah. The president told everybody, I'm tariff man, it's the most beautiful word in the dictionary, we're going to have tariffs, and still the extent of tariffs surprise people. The randomness of what actually happens is just totally unforeseeable.
How do we avoid that trap, though?
So if you're putting together a portfolio, it has to be robust enough, diversified enough, that it could withstand anything. No matter what happens, you have to be able to suffer through 20% drawdown in equities, bond yield, the Fed raising rates 500 basis points, bonds and stocks having a down year together for the first time in 40 years. So diversification and just some intelligent planning. That's one way to think about it. The other thing is you can't take candy from strangers. And I say that all the time. You hear somebody on the radio, on TV, in a magazine, or just at a cocktail party, and they make this compelling case for this company, this asset class, this event occurring. Who are they? What's their track record? Do they have a temperament? Can they be relied on not to run around with their hair on fire every time there's a 5% pullback? Do they have a process that's defendable? And so the way to get out of the trap of forecasts is create your own list of all-stars, and many of my favorite all-stars are here this week, and put together people you know you can trust. They have a good track record, they have a good temperament, they have a good process, as opposed to just letting every catastrophic piece of news come along.
Yeah.
By the way, tariffs, I heard at the time, this is the end of the U.S. economy, we're going into the crapper, and stocks are going to sell off. What are we, up 11% for the year?
Yeah.
And higher off the lows. So if it leads, it bleeds, has to be compartmentalized. You can't get sucked in every time there's some bad news out there.
Yeah, so you highlighted it. So you talk about it in the book, information hygiene, right? And so I'm curious, who or what is your information hygiene? Like, who do you follow? Who do you listen to?
So there's just, I'm always afraid I'm going to leave somebody out because there's so many people I pay close attention to, not including my own crew.
Yeah.
So the Ritholtz Mafia puts out amazing content, and you'll see a lot of those guys here this week. But Sam Rowe is somebody I pay close attention to on market structure, very reasonable, very data-driven. I like the way Ed Yardini integrates economic data with market data. Dave Nottig about anything related to ETFs. Jonathan Miller, anything housing related. I could go on and on. But the thing that all these people have in common, Jason Zweig, Morgan Housel, about anything behavioral related, the thing that all these people have in common is they've been around for a few cycles, they've seen markets rally, they've seen markets crash, and their approach is rational and defendable. They don't freak out every time there's some breaking news.
Yeah. One part of the book, well, one, I love the historical references and obviously the names. And the thing I always say about Barry is Barry's like my cool uncle, right? He knows everyone. He has like an inside story about everything, and he gives you all the time in the world. So it's like I'm always eager to hear these stories. But I'm gonna shift to one thing, which is the fun money sleeve. I thought that was really interesting.
The cowboy account.
Yeah, yeah. So obviously we're all human here,
Right.
and you see where the markets are today and where investors are kind of quote unquote trading, right, or gambling, as you would say. Like, how do you manage that in terms of the practice with the client if they want to have that? Like, how do you talk to them about it, and then how do you advise it around it?
So the first thing is you have to know yourself. I started on a trading desk, and let me tell you, nothing better than a friend said there's only two things I like. That's serotonin and dopamine. And it's because the adrenaline rush of being on a desk, if you find yourself trading for fun rather than P&L, hey, that's a warning sign. But there are people who like the action, love talking about stocks, love picking stocks. So take 3, 4, 5% of your liquid net worth, set it up completely separate from your other account. You shouldn't be able to easily transfer money back and forth. And trade your ass off. Market time, trade options, do whatever you want. But when that goes to zero, you're done. And you have to say, thank goodness it wasn't all my money. And if it does well, we see it so often, someone's in a stock that's crushing it, and they can't take the pain because it's going up. And they're like, I'm going to lose money if this, and they sell it early, and it keeps rallying. So with a small amount of your portfolio, you can let stocks run because it's not your whole net worth. That's a good behavioral hack to prevent you from doing stupid things with your real money. Like, if it's 5% and it blows up, hey, cheap tuition.
Yeah, good story to tell. Shifting back to the book and when you were writing it, was there a chapter as you were writing it that you were like, oh, this is going to start a lot of people, I'm going to get a lot of hate mail? And if so, what is it?
Yeah, the inflation chapter and the chapter on what money is. I actually got less hate mail than I expected, but the hate mail that came in was very much what I was anticipating. So it's not just people who are anti-dollar or anti-fiat currency or pro-hard metals or crypto, whatever it is. There's this thing that goes around that says your money has lost 96% of its value over the past 100 years. And nobody asked the right question, which is, why the hell would you leave money in cash for 100 years? Your money is an exchange of value. It's not a store of value. It's a medium of exchange. You get paid in dollars. You use those to pay your mortgage or your rent, your taxes, your food, your entertainment. You invest your investments and whatever you put into your own business and whatever you give away as philanthropy. It does that splendidly. But to imagine that you're going to sit holding money for 100 years is a meme that circulates every year around Thanksgiving. Kevin left home alone. The bag of groceries that cost him $19 back then, today is $77. Well, yeah, it's 2025. You're not buying those with dollars from 1990. You're making more money today. In fact, inflation went up a little more than wages, but it's essentially a wash. The bag of groceries he bought then and what you would take with a median income buying the same bag of groceries is about the same today. You know, so the idea that, oh my God, we're only going to look at one half of the equation and look how terrible inflation is, you're making much more today than you were 35 years ago, right? The average income is so much more. So you just have to put things into smarter context. And again, I love showing people, you take $1,000 in 1917, right before World War I, and put it into what didn't exist then, but a broad market index, you know, and just let it compound for 100 years, it compounds up to $32 million. So I guess if you buried $1,000 in the backyard, you're only going to have $40 left. But if your great-grandfather had put it in the market, you're a multi-millionaire.
Yeah. Last question on the book. Was there a chapter, section, story that you chose not to put in the book for whatever reason that you regret?
There were a couple of things that were, you know, I don't want to just keep repeating the same lessons, but humans make all the same errors. I make all the same errors over and over again. So there's some stuff that were just adjacent to this. And as you said, I had to cut something out. How Not to Invest 2, I have no plans on writing, but I probably have another 300-400 pages of stuff also. Everything that I wanted to get into the book got in, and then some.
Well, I would say the audio, if anyone hasn't listened to the audio version, it's pretty awesome because Barry performs it, and he adds a lot of color throughout the book too, which is really good. All right, let's shift over to Masters in Business.
Sure.
So you started Masters in Business in 2014. It's a long time ago now.
The pitch was September of 2013. I pitched the idea to Bloomberg, and the answer was, what's a podcast?
Yeah, I was about to say, what was the original idea?
So I had been writing the personal finance column for Washington Post, and they were recruiting me, and they said, hey, we have this amazing facility. Would you like to do anything with TV or radio? And I'm like, how do you feel about a long-form interview with rock stars of finance? Like, what do you mean long-form? Like 10 minutes? And I said, no, like 2 hours. And when everybody finished laughing, they said, tell you what, 32 minutes is an hour of radio. You could put everything else up online, and if anyone listens, great. So that was about 550 episodes ago, and it's the most fun I have all week.
That is crazy. 550 episodes.
Yeah.
Who are some of your favorite guests?
You know, the people I had been chasing for a while who had not been doing podcasts, I guess I can tell this publicly. So I had been chasing Ray Dalio for years, and he was a very prickly interviewer. He doesn't do good media. Now he's much, much better. But back in like 2014, 2015, he was really below the radar, not doing a lot of press. And when I saw Principles was coming out, and by the way, I'm sending like obnoxious emails every month. hey, why was Ray at this event? That was a terrible event for him. You should come on the radio, and radio silence, just crickets. And I see on Amazon the book's coming out, was it September 2017, 16, something like that?
Yeah.
And I'm like, hey, Ray has a book coming out. Let's sit down and have a conversation. And to my surprise, they're like, great. We could be here at this day, at this time. And to my shock, he got there like a half hour early. We got to just shoot the breeze for a while. And when he sat down, I could tell he was just totally relaxed. And it was just an amazing conversation with a guy who, prior to that, wasn't really getting his story out. And since then, he's become, you know, a media monster. But that was a really fun one. This weekend, I just had Neil Katyal, who did the argument in the D.C. Court of Appeals and won the case. That I'm shocked the Court of Appeals dropped the case 5 o'clock Friday before Labor Day weekend. I thought it was going to have a bigger impact, essentially holding that the tariffs are unlawful and void. It's up to Congress, not the president. That's going to go to the Supreme Court. It's really fun having that conversation. Yeah. I love talking to folks like that who are just such unique experts in such a specific area.
Yeah.
And just so articulate and so interesting.
Well, we're going to get into, because I think you're like a master interviewer. You make very important people feel very comfortable, and that usually leads to you getting the non-PR spiel. So we're going to get into some of your kind of tips and tricks on content creation. But just thinking about the different interviewees you've had along the years, have you seen any patterns with, like you mentioned Ray Dalio and other like prolific investors? Are there any consistent patterns you see with those people?
In terms of their
investment philosophy, style, who they are as a human, off the pod. Right?
That's a really interesting question. So the first time someone said this to me, I called bullshit, but I've heard it so many times that I'm starting to think it's real. And that's, you cannot underestimate the role of luck and serendipity in success. And when you see these guys who are billionaires saying, well, they're not saying they just got lucky. Howard Marks' car that he used to commute to Columbia Business School, it was him, Mario Gabelli, Leon Cooperman, I can't remember who the fourth guy was, but like 4 rock stars. And when he said, you know, you got to be lucky, I'm like, what does that really mean? You got to be hardworking and smart also, right? And he's like, everybody at Columbia Business School was really smart and really hardworking. Not all of them became wildly successful. Not all of them became businessmen and billionaires. He goes, so you need preparation. You need to recognize when chance presents itself. But sometimes you just, you know, sometimes you just got to get a friendly deal.
Yeah.
And the first few times you hear it from billionaires, it's like, yeah, okay. But after the 10th or 15th time, I think it's sincere, and it's certainly true in my life. I've gotten lucky a number of times. Being able to, you know, one of the themes in the book is about humility and being humble, and I've learned to contextualize when a really super successful billionaire guest says they're lucky. It's an admission of humility that, hey, you don't control the future. Sometimes you just gotta have things go your way, and I think that's really significant.
Has there been a person you've interviewed that's kind of changed your thinking? Not like, oh yeah, just my investment philosophy, but like actually change your like life thinking and change the patterns of how you operate?
You know, every now and then, so I was pretty down on high-frequency trading when Bill McNabb, the CEO of Vanguard, says high-frequency trading saves us millions and millions of dollars on behalf of our clients. Oh, I guess I can't really argue with that then. And I've had like lots of things like that happen. I think I'm much more open to alternatives today than I was 5 or 10 years ago. There are some folks who genuinely create alpha. The challenge is either finding them or talking them into letting you put money into their fund, because most of them are closed.
Yeah. All right, let's shift over to content creation. I think of you as like you're on Mount Rushmore of financial content creators. You've been doing it probably the longest, the most consistent. if I talk to people, probably many people here, you know, what was the impetus to kind of start or to get started? It was, oh, I grew up listening to Barry or reading Barry rather. Can you just talk through a little bit of your content creation like process, how you really
Sure.
got started, and your passion for doing it for so long?
So it got started just as a way to create a public record of something I was reading about or writing about. That began, now I'm really going to date myself, that began in the late 90s on Yahoo GeoCities, which is now defunct.
There's probably some people here that weren't even born then.
That's right. I bet you there's a lot of people weren't born there. And then that moved to movable type in '03, and then WordPress in '08. But I talked about getting lucky. I was doing this. I switched jobs. I became a chief market strategist for Maxim Group, and the general counsel. I got called into his office, fully expecting to be told, "Hey, this shit has to stop. You can't post anything else. We're compliant. We're this. We're that. There's a whole SEC breathing down our neck. No more." Instead, he's like, "Listen, here's the deal. You can't tell people to buy a specific stock or sell a specific stock. What else? That's it. Have a nice day." Like, how dumb lucky was I that I was working for a firm that said, whatever you want to write, knock yourself out, post it, share it with the brokers, share it with the client, share it with whoever you want. Just don't say buy this, sell that. That has to go through the research department. I'm like, okay. So that kind of gave me carte blanche to throw some grenades, and I threw a few grenades.
All right. We have some questions here. All right. You want to just riff on these a little
Sure.
bit? All right. Let's do the fun one. Does Barry personally pick the music for the At the Money podcast?
Yes, and I try not to make it like this pathetic boomer list, but it's a lot of classic rock mixed in with some 90s sort of stuff, and that's also a lot of fun to try and find a song that ties somehow to the theme of those little 12-minute single topic conversations. And I created an entirely separate Spotify playlist that's every song from all of those.
That's awesome. Questions, expert questions. You are a master at it. No, I'm going back over here. Back over here.
Okay. I'm like, I don't see that. Expert, what?
So the funny thing is, ever since I started interviewing people, Barry and I will always get together, and we'll always spend some time up there. And I'm like, oh, here's my questions. This is the first time I actually didn't let him read his own questions, but he always rips them up. Or he'll like, oh, that's nice, but what are you trying to get to?
Do you remember the Joe Montana interview?
That was false, yeah.
So yes. So if you've ever seen Joe Montana speak, he's just like great raconteur, unbelievable stories. You don't need like a 3-paragraph question. It's like, so Joe, what happened that time with Kansas City? That's it. He's off and running.
Yeah.
So that was always my advice with guys like that.
But I think you have it's an art, right? You do find ways to ask questions that don't feel like interrogation and that help to kind of thicken the plot. And then you get people comfortable where they're sharing, not catching them off guard, but they're sharing things that maybe their press team might not want them to share necessarily, or they didn't go into the conversation thinking they were going to open up that way. Like, is there a process that you follow in order to get that? Or do you just act completely interested?
I try and do 2 things in each interview. I try and create an arc where I'm telling a story. And it's funny because there are certain questions that bubble up all the time and have become regulars. Like when you see someone who's all right, if you have an MBA and an undergraduate economics degree, you kind of have a sense where their career path is. But wait, explain French, literary, and art history. What was the career plan there? And so you get them speaking and you find out a little bit about them, and they become comfortable that you're presenting them in the best possible way, and you're trying to get them to tell, hey, who are you? How'd you get that way? What's your story? What can the rest of us learn from you? People pick up on that, and it just makes them comfortable. In the beginning, and I'm glad that the first 6 months of the show are not online anywhere. They kind of, before iTunes, Apple Podcasts picked it up. They were just online, and they eventually, disappeared. And they're pretty awful. And it's just caffeine and adrenaline and reading one question after another. The head of radio once said to me, when a guest tells you that they murdered their wife, don't just go to the next question. Ask them, why'd you kill your wife? Where'd you bury the body? How'd you get away with it? You actually, so listening is part of, oh, so that was a skill that needed to be deployed, developed.
All right, we're up on time, but I want to do a quick lightning round with you.
All right,
Is that cool?
fire away.
All right. A media trope you'd ban from finance coverage today.
Say that again?
A media trope you'd ban from finance coverage today. You talked a lot about media earlier, the things that you kind of hate.
It's not black and white. It's really challenging, and every outlet has authors I really like, and people don't know, the writer writes the story, and then an editor creates this ridiculous clickbait headline. So you have to be selective, and it's, there's stuff on Fox Business I like. There's a lot of stuff on the Wall Street Journal I like, and I don't like.
This is a lightning round.
This stuff in, say that again?
This is a lightning round. Next question.
Next question.
Favorite car? I'll give you an easy one.
1959 Mercedes-Benz 300 SL.
Best question a client has ever asked you?
Jesus. How long are you going to do this for?
We got 3 more. Depends how long your answers are.
Go ahead.
All right. This was an easy one.
No, that's the answer the client said to me.
Oh.
How long do you want to keep doing this for? Not the speed round. Hey, you guys going to be here for my kids, or you guys going to shuffle off the...
That's great. All right, we'll end with this one. What's a MIB guest that you're still wishing to get that you haven't gotten yet?
Well, Jim Simons is dead, so I missed that window. I'd like to get Paul Tudor Jones. He's somebody that's, one of these legendary rock
awesome,
stars.
actually, yeah.
And I have a couple of people teed up for the fall that are white whales that I've been hunting.
Cool. All right, guys, we're up on time. Please give it up for the man, the myth, the legend, Barry Ritholtz.